Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. I'm sorry there's no stock twits today. With the monsoon hitting in the Northeast and this and that, we'll pick it up next week. We're probably going to be going to, twice a month for that versus every week regardless. So today, how did you handle it? I know I came in today with an opinion, pretty much. I tried to be cute. I try to use this whole percentage probability thing because everyone loves a big call. Everyone thinks that you need to say something so out in the future in order to, make a headline or look good. So, I came in today thinking that, we would retest the 50-day, but probably wouldn't be a good bounce. Probably would be lethargic. Probably won't amount to anything with participation across the board. So, not really looking to, be short because we could go into a certain area, which I'll get into, but I'm not looking to start buying anything for more than just a trade because, we're in market correction mode according to IBD. The last 2 days of action has been pretty bearish, for me, I was like, what? I don't have that much interest in the tape. But as the day developed, first, a few things happened. Banks were strong first. I think I remember tweeting that I'm like, banks are okay or holding in there, and the home builders are actually showing relative strength. It's funny how the room gets a little changed. The room was pretty bearish. My whole, the whole trading floor was not thinking how much we could rally. So everyone's like, can't really trust it. Let's not really trust it. Okay, so Goldman went from down to up 80 cents. A lot of the other banks went green. The home builders were up well when the market was still down, and something that hasn't happened in a while. And then also Netflix, did that red dog reversal, which I'll get to, where it made a low, came back above it, was up a decent percentage and held in there and then closed strong. So anyway, a lot of things, if you had a clear mind, which I didn't because I didn't think that things would materialize or evolve, looked pretty good. Google held where it had to, Amazon held where it had to, even Apple went below the 50-day, came back above it, so it's hanging on by a thread. So everything started to develop, but a lot of people were just like, this isn't going to hold up. It's not going to happen. Let's just, some rolled up shorts and got really hurt today. Some took a loss and said, okay, I was wrong. And some just kind of sat it out because said, I wasn't thinking that. So it's all good. You can come in with all these different types of plans. But then, the question is, did you cut your loss if you were trying to be short? Did you, get frustrated and roll it up and get big and give back a lot of money that you've been working hard every single day to make? Or did you just do pretty much nothing and not really take advantage some of the decent patterns that presented themselves? So with that said, let's take a look at the chart of the SPX. So as you're looking at this chart, take a look at it before I mark it up. You know that I've been marking this up on Twitter every day or so just to keep everyone in the loop. So take a look for about 3 seconds. Count to yourself. Okay. Now, with the lines in here, I hate to do it in hindsight because I like to be forward-looking. What do we see? We see a trend line that's held, right? We see 2 red dog reversals. One I was looking for, okay? I was looking for this red dog reversal, okay? So maybe that's why, I participated in a lot more because, from this outside day that we had here, okay, through the 1674s up to 1687. That's what I was kind of looking for a reversal to take some risk off, which is what took place. Then, you had this wedge type pattern where here was that Friday engulfing bar, and then into this, this trend line, which has been holding, and the 50-day, it made sense that, okay, here we go, we're going to get this and, get some kind of, bounce back trade. So that one we were kind of planning for and prepared for, but also thinking that it wasn't going to really amount to much. And what did it do? It came into this, resistance area, this downtrend that's been controlling this ever since that outside day. So with that said, we come in today, you look at the chart, and it truly looked as if this time, you have a high, lower high, negated again. We opened up yesterday and reversed into the close. So coming in today, I was like, you know what? We're probably going to try and bounce off the 50-day, but I think that maybe there's room to this area, okay, this 162.75 to 163.50. So, if you come back to me and you follow me, on the virtual trade floor on Twitter, I'm like, there's room to grind, meaning, from where we were yesterday to where we opened was about 30 handles. So I'm like, we could probably grind back to 162.75 to 163.5. But if the bears have any control, and you've heard me say this, because I'm neither a bull, I'm neither a bear. I measure the action and I try and participate in a way that is conducive to my style, where I could sleep at night and profit and have a career and also talk to everyone and tell them what they should do. No, but anyway, so I talk in a way where, if the bears have any control, this is the area that they should not let get engulfed or closed above, because then that would bring this back into more of a neutral pattern that might need more time before picking a direction, that something might not happen as quick. So with that said, before we go back to the chart, let's do, one more time here. Okay, let's go back to the chart. Remember here, okay, remember when, we had this red dog reversal. This was that Friday, okay, the Friday that we engulfed it. It was a nice day to add to your shorts, especially if you were here and you were waiting for something to work out. And then the next day, okay, you had a red dog reversal, small one, okay, one that people thought, okay, this one you couldn't have an opinion with either. We traded below 1630, made a low at 1622. Okay, that's a reversal. You have to somewhat respect it, okay? But it stopped at the bottom third of this wide range bar, and then the next day, okay, remember it went into resistance, and I said that, I think we even talked that day. I'm like, if the bears have any control and want hopes for lower prices, 1643 to 1645-ish or whatever that was, they should defend, okay? And they did it there. And that's what helped give us the move down to the 50-day. Boom. And then this is when the following day you had your red dog reversal. Okay, so those were some of the thoughts and some things we talked about during this process to try and navigate. And then you go back to where we were here. Here was that red dog reversal, bounce into resistance. And then here is when it looked as if, we were probably going to break this trend line. Could have been for the first time this year, right? We walked in, Japan down 6%, Europe down 1%, China off again. You had all these things that maybe I got to turn some things off and not listen to the world around me, but all these things saying that we should break that area this time is different. But you know what? As I look today after the action, I hate doing it after the action, time doesn't look any different. So then the trend is still there. I think we got into this trouble a few times during this year when this happened, or back last summer. So anyway, you go back to the chart. So really, this was your inflection point, 1610. That was yesterday's low after a move from 1648 all the way down to 1610. There could have been a double bottom or a retest. So some people actually said on Twitter, like, Scott, don't you think it could be a double bottom, perhaps? And I was like, I kind of like poo-pooed it. I'm like, yeah, it could be a double bottom, but I just don't think it's going to work this time. Who am I to say that? Anyway, so what happened here, boom. 1610 went as low as 1608. You could have said, I'm going to do the same type of red dog reversal as I did here. Okay, who knows what it's going to amount to, but I'm just going to buy it and trail it. And if that was the case, you could have bought 1610 with the two-handle stop, and it went 26 handles all the way to the top to close near yesterday's highs. Right there, that's kind of crazy. And if you go here and you take even a wider look, okay, to think of how could you have handled today differently, okay, this was the area that I said the bears needed to defend, right? If the bears had any control, kind of like what happened here, halfway in, they would have sold it and not let it go all the way back and engulf. Remember this engulfing, that the resolution was right here. So if they were going to engulf it, it would have changed it. Here, it was the same thing. Were the sellers going to be able to hold half of yesterday's move in order to keep the potency there? They did not. So really, this was your spot. If you were short, if you didn't have an opinion, you try not to be stubborn. That's really where you should have covered, guys. Okay? Not putting any salt in anyone's wounds. Okay, you go to the spiders. This is where it was in the spiders. We talk about it there too. What is that? That's yesterday's low. Okay, that is 62.74. This one was, what's this low here? This low is 163.14. I even, gave it a little bit of the benefit of the doubt, said, 63.50. So right there, in order for this bar or this 3-day move to remain in control, that should have been protected. So with that said, you go to the 5-minute version. Okay, it's a lot going on here. And really, this was where, if you look at it like this, I have a lot of lines in there. Really, right around here. Okay. If the Bears had any control, they should not have really let it get through this whole area. So hopefully, this 163.50, you stopped yourself out because it went another dollar. Okay, another dollar higher, you could have saved yourself. Unless you have all this conviction, you're like, I'm holding this through no matter what. Okay, I'm going to be right. This is, tomorrow we're going to be down the same way. But you know what? A lot of that has happened here, and a lot of people rolled up the shorts through. Another thing happened here. Remember this engulfing bar? Then here, some people, if they did not respect the halfway mark, which was like right there, they said, I'm going to be right at some point, and they probably hated the world during this move. Same thing here. When you had this type of wedge after the corrective activity, here was your red dog reversal, and then it should never have pierced and held this way in order, if the Bears hope to have lower prices. So anyway, here's where we are. Another really, now I guess if you want to talk strategy this time, now you want to see it hold in this upper end of it. Maybe now we hold above 163.5 for a session. Be nice to have an inside day or two up here. So then perhaps we get a nice trade through this downtrend to get back in motion. So we'll see. Tomorrow we open up and we take this back. It's just a choppy washing machine mess. But at this point, you know what? You have to respect it, and that's why I went back to more neutral versus short in the brain. And I didn't go blaring buying into the close and say, okay, day one, we're going to continuation tomorrow because we might open down 6 handles, which then tomorrow you'll see what holds up and what things act well. So early on, you look at the XHB, and it's amazing that this continues to hold where it has to. It's been pushing the envelope a little bit further, being on the pullbacks relatively weaker than the S&P because it went through the 50-day, but held again. Looked like it was going to be different. It did. I said it this morning. I'm like, this time could be different finally. Look, this time could be different. Coming in today, it looked like it was going to be different, right? But did the market confirm that it was different and get to the 200-day? No. The market said, I want my home builders back and engulfed 4 days worth of action. So with that said, that gave you some clues that we were going to continue up. Banks were also strong off the bat. Okay? Banks never even made it to the 50-day, which was down here. So the bank still, in my opinion, is the strongest group and something that you have to focus on. Goldman Sachs led the way today again. Look at that. Engulfing, it's not the easiest thing to deal with, but look at this. Overall, above the 21-day, hold it in there, and it looks like it's going to make new highs again. Believe it or not. This stock's been trading with really good patterns, but this went from negative to positive and didn't even break below yesterday's low. So, and then continued all day long grinding. So anyway, you see the charts after the fact, and sometimes it's easier to see, after. But a lot of us also, again, like I didn't have a plan that I thought that today would happen to this magnitude. But you didn't really have to. You just couldn't be stubborn and say my plan is right and I'm going to be right and I'm going to short and get my clock cleaned. Anyway, even in high beta tech land, okay. I think my one setup that I was talking about, you also had on the price point sheet, was an 80-20 trade in Netflix. Like maybe Netflix trades below yesterday's low at the 50-day, engulfs it, and you get a good trade. And that happened very nicely in Netflix. Okay, did not even have to take much pain, guys. And this was Netflix. Okay, it traded briefly through the low. It was only down like $1 and change. Traded below 206.87, hit a low 205.75. So about $1 worth of risk. That's all it was. Okay, could have bought when it went back above this, put a stop in the close at the low of the day, and now it's back to perhaps knocking on this door. So all of a sudden, just like that, this repaired. But we'll see. This was when it broke down yesterday, and this was a little red dog reversal. And now we'll see. Do you need to keep going sideways before it breaks to the upside? It's funny because as I was in that trade today, I started to hear from a lot of different people, whether it's sales trades or whatever. Oh, there's talk of a Netflix secondary. So that got me out of my stock and whatever. Market didn't care. So sometimes it's better off talking to nobody, not looking at anything, and keeping the sound off and looking at the action. It was strong all day and closed strong. And now we'll see. Hopefully it goes inside, there's a few inside days, so there'll be another buyable pattern if you go back here, and look. If it crosses above this 215-ish, 215 or 216, we'll see. Amazon also, lo and behold, this being that pattern that broke out, stalled at the 52-week highs, market regrouped, this being one of the leaders of high beta tech land, even though it got downgraded twice, wound up really holding where it had to. Came back, retested, and held. Didn't go back into this base that's been here for so long. So, this now looks good again, just like that, right? And then here is your little 2-day pivot. So we'll see how we handle that. Maybe open down tomorrow, trade through it, and then, we continue this again. We'll try here at this action area, and that's all you can write down is action areas. Even Google, as bad as it looked for a little bit today, just like that, here was your descending channel, boom, okay, broke out, retested, went. Here was when it broke the 900, this upper flag gave way, descending channel. Last Thursday's, outside day, market came back, retested, this held higher, and what do you have here? You have two things. You have A, a retest of the descending channel that we broke above, and B, a red dog reversal, right? Or where it traded below this 869.65, went as low as 865. So yes, this is a $4 stop, but it's in a stock that could move $10, $15, $20 in a day. And it closed at 877. So if you put that on, you made decent money. Now it looks like another small flag / descending channel is building where the market hangs in there and looks for leaders. There you go. Okay, maybe 880 will be the spot. And then, big move from here to 890, held higher. That's something to keep in mind for Google. Apple, which still remains just a horrendous trader. You look back on it now and it's still, I hate to say it, a thread. This thread is so damn strong or thin, whichever way you want to look at it. This pattern is still sort of here, and I feel like a politician, how many times I've been talking about it. Micro version, okay, a few things. Here's your 420, which it's still above. Here's that ascending channel, which it broke below. And then today, it did, a small, very small, red dog reversal, and it, reclaimed the 50-day again. So I guess, you could say that this is a small descending channel here too. Or you could just say this is not worth your time. But anyway, above 430, I guess above like 438, 439 maybe, it tries again, and then at some point here is your real macro resistance, which still needs a lot of time. You still have this, right shoulder building, and this micro stuff going in it, and we'll see. We'll see. I don't know. That's just, I'm trying not to gravitate back there. So Yahoo still looks good. All of a sudden, now it's just holding higher, holding this 50-day moving average. Looked a little weak yesterday, but all in all, held in there. We'll see what happens if it could continue and then at some point go. Triple D, okay, still looks pretty good. After stalling, after the news of the takeover, it still held above this, still gave you a red dog reversal, still, you have a descending channel right here and another pivot, so it's still hanging in there. Let's see what SSYS is doing. Small little inside flag, maybe we'll see some action there tomorrow, right here. Okay, off the lows, so all in all, still looks good in hindsight. Let's see what our friend Musk is doing here on Muskwatch, TSLA. Getting tight, tight. Okay, it did look like it would break this to the downside, but it didn't. Again, held support, held the 21-day. So it's only a matter of time with the short interest and what goes on with this stock that it's going to stay like this. So here's your defined area. I guess if we were to start trading back above 100, maybe it can resolve to the upside, but it still might need a little bit more time. Solar City, still not really acting well, even though the lockup's over. Here is, a descending channel that, or two areas that until it gets above both these areas, it's really a nothing. And then here is your support. So it's still not, it looks like it's not ready yet. Maybe one day we'll see huge volume and we'll see a change there, but it's a lot of shares being absorbed. Let's see, YCS. Okay, I did go long this today, and we'll see what happens. Okay, you know, it had a big move. Okay, since this red dog reversal here to the downside, it did put in a hammer bottom after filling this gap. So to me, it was worth a trade. I don't know that much about it, you know, but I figured it's worth a try, so I'm in some. You know, it's funny is, you know, Japan, a lot of people are like a little confused because Japan was down 6% yesterday, if you come back to me, and 20% off the highs. But the EWJ, which is a proxy, which obviously doesn't do the entire Nikkei, never pulled back to those lows, right? Does that make sense? This was, you know, what was this, almost a week ago. And then as of yesterday, the Nikkei was back to 20% off the highs, the lowest level it's been since this red dog reversal. And here we are, you know, closing a little bit higher right there. So this still was more of an opportunity down between 15 to 20% versus selling it down here. There's your red dog reversal sell, and here has been your basic accumulate, and now it looks like it could go higher. So I don't fully understand how it correlates, but whatever. Let's see what DXJ looks like. You know, not the same actually. It didn't hold as high, but this, you know, made a higher low, little, you know. So this is a little bit more baity here. We'll see. So with that said, did I say with that said? I don't have Darcy here. I don't have Brittany here. So yes, I did. With that said, today was, you know, unexpected in my opinion, but you know, the market could always throw you unexpected curveballs. And with that said, did I say that again? I did. You have to adjust quick. And I had a little plan in my head that we would test a 50-day bounce off it would be feeble, and that it could be shorted at 162.75 to 163.5. But you know what happened? It just blew right through. So did I short it there? No. Actually, I tested it once. I'm like, you know what? These things are too strong. I'm out of the way. You know, if you were the guy saying the same thing, you know, we're going to fail at the 50-day again. This retest is going to fail. But it didn't. It actually passed. You know, I'm going to short. And now there has to be a bigger correction than 5%. And you're still short. You're probably not going out for Thursday happy hour unless you want to forget about what could happen tomorrow, which we could be down a little bit, but still, it's not the right trade. It's the stubborn trade. I have conviction that there's no way we can continue higher, which people have been doing that since January, maybe even since last year. So you better know your time frame, know your risk. If that's you saying, I'm going to be right, and the market's not letting you know you're going to be right. And that, as a trader, is something that's dangerous to do. So tomorrow's Friday. We'll be monsooning tonight here in the Northeast. We'll see how that goes. I am hosting CNBC Asia from 6 to 7. So if you have CNBC World Markets and you want to watch, you could do so. And, you know, if you missed out today on the rally and you weren't expecting it, no big deal. If we, you know, come in a little bit the next day or two but hold higher and stocks act well, you know what? We'll go back to portfolio approach. This is like the third time this year that we went from portfolio approach to where we weren't sure. And then after a few sessions and it proved that we could hold higher and things could, you know, continue in motion to the upside, we put back on positions 4, 8, 12, 15. So next few sessions we'll figure out if we can. Tomorrow, if we just give back what we made today, then, you know, there's nothing you could do about it except for, you know, some people will probably go to the loony bin. But if we hold the top third of today's range and things look good, then maybe we get some more conviction that that downtrend, you know, at 1645 or 165.5 could get broken, and then we see new highs a lot quicker than we thought. But don't fight it. Participate, and participate in a way that makes you feel comfortable. Scott Redler, T3 Live, the recap. Have a great night, and I'll probably see you tomorrow morning, or you'll see my editor-in-chief, who's been doing a great job, Mr. John Darcy.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.